and we spiked hard and markets crashed. Okay. So just look at this. Okay. 18 February, we broke out. 17 March, we had a rally. Okay. Ready? Let's get rid of all this stuff. Feb. That's when we started to come out, right? See? 18 Feb right here, we started to break out. What'd the markets do? The market started coming down. And then what happened? March, this stuff is in my way. March, right here, March 10th, March 17th, March 24th. We had a rally back to the 9 EMA. Right here. 10 March, down to 17 March, we pulled back. SPY rallied up. Rallied up how much? Basically about, almost 5%. Then we had the big move where from that rally, we cranked lower down 16%. And what did the quorum do? It absolutely spiked. Then from there, we made so much money. You made so much money in your investment. Trading was 10 times easier because it was a clear, honest, bullish uptrend. Everybody's a genius in a bull market, right? It's a saying for a reason, and it's the exact thing I teach in my community. I teach, why are we sitting here during this choppy area and trying to force bullish trades or force bearish trades? In the choppy areas, we trade both A+ bullish and A+ bearish setups. Because guess what? During that chop, drones in space absolutely ripped, while other things like fintech, like Robinhood and SoFi, crashed. Microsoft crashed. Saskeddon, tech services crashed. Short that, long space and drones by looking at the market from the indexes to ETFs in individual sectors, then into individual stocks. So during the choppy period, we start trimming our investments. We raise 15 to 30% cash on our investment side. On our trading side, we cut back on how much we're spending out of our trading capital and using to trade with, because we don't want to get tariff-geddon. We don't want to get shellacked like we just have been getting these past few weeks, or other people have been getting these past few weeks, because markets have been coming down. And if you're trying to force trades to the upside saying, we're going to bounce, we're going to bounce, we're going to bounce, and we don't, you're going to get shellacked on trading. You're going to get shellacked on trading. So we pull back how much we're actually trading with during those times. During the choppy periods, we're doing some longs, we're doing some shorts. Then when we get an actual breakdown and bearish like we did since basically end of February, March, you really want to find and only be like shorting. Maybe there's an A+ setup, one or two on, to the long side, but you don't want to do too many of those. And if you do them, you want to get out quickly with gains, like Dell. Dell, we traded it. We were up like 15%. And then I just literally had to get out at a break-even stop loss because it came right back against us. And I told my community, I was like, yep, I should have just exited, 15%. But you're always like, oh, I could keep going, but it didn't. So, and then guess what? During those bullish times when we're just going up and up and up and up, like from April to October, that is easy money. Your investments are going to go up. You could be, continue to dollar cost average into stuff. You can find undervalued stocks, ride them higher. But then once you get to that area where it's like, things aren't looking so good, we're looking toppish, what's wrong with raising 15 to 30% cash? What are you going to miss out on? If the market keeps going higher, then okay, deploy the 15% and then just hold 15%. Half and half it. That's what people don't get. They just want to be all in the market all the time, and that's not how you play this game. It's not how you play this game, because then when the opportunities come, whether trading in the new bull run or whether investing before the new bull run, and with with people wanting to buy Robinhood over 100 or SoFi over 30, but now they're at 17, 18 on SoFi and literally like 60, 70 on Robinhood, people don't want to touch them now, or they don't have the money to touch them. Come on. Anyways, this is a long video, but I think there's lots of good value in this. Like I said, drop a like if you're getting value out of this. Okay. Last thing, and then we'll talk about some opportunities. The quorum goes up, markets go down. The quorum goes down, markets go up. Very simple. We just talked about Tariff-Geddon, beginning of 2025, and how we consolidated, chopped sideways, and then we broke out, pulled back, and then we had the actual really bad move down. So it was like, oh, that sucks. Oh, we're so back. Oh my God. I just got wrecked. And then now we're so back. Yay. Make money. To what? To down, consolidating, retest, or almost breakout, boop, higher. Look at this. Look at this. Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and boom. From February 23rd, we broke out of this channel, out of this downtrend, broke out of this downtrend, and ripped. Now, this is based on the weekly, okay? Very, very key. This is more key to telling me right now, I would say I would lean probably 60% the correction's over. I would say this. 30% the correction's over. 30%, no, sorry. So I'm doing this like on the spot. I would say 40%, this is going to continue and it's just going to be a correction though. 40 to 50%. It's going to continue and we have another leg down in this correction, not a bear market. Yeah, 40 to 50%. 30 to 40% that this is going to be the bottom. 20 to 30% that this is a bear market. There you go. Look at this over the mags, over all that stuff I was talking about earlier. That is important. But if you want to know before that and increase those chances from 30 to 40% that this is bottom to probably like 50 to 60% that this is bottom, this is what needs to happen. Tomorrow is Thursday. The markets are not open Friday. Tomorrow is the last day that markets are open before a 3-day weekend. The last time during Tariff-Geddon, when we cross, this purple line, by the way, is a 6 EMA on the weekly. When we made this cross down, the markets had bottomed. The markets bottomed up here. This confirmed it right here. You see, I have it highlighted for a reason. Do you see that the quorum is coming down and looking to cross through the 6 EMA? Yes, Ronnie, I see it. Listen, tomorrow is Thursday. The markets aren't open Friday. That means we have to wait till Monday. If the markets are uber bullish again tomorrow, which they haven't been for like 8 or 9 weeks in a row on Thursdays, by the way, and Trump speaks tonight at 9 p.m., if the markets are uber bullish tomorrow, then this is going to make this cross. And I would put that we have bottomed up to 50 to 60%. It becomes the primary probability that we have bottomed. Okay. And then I would want to see the next week do the same, but like maybe like retest right there, small pullback, and then that. And then you start seeing other things like the mags, reclaim 9 EMAs, and fintech and IGV bouncing and getting back above the 2. You see what I mean? Like you start putting the puzzle pieces together and then you have a bottom. Again, it's very hard because there's a lot of puzzle pieces, lots of like very small puzzle. It's like 10,000 piece puzzle. Tons of small little puzzle pieces, and you got to put it all together and try to figure this out. Way harder than whenever it's like, okay, we're just chopping sideways. There's plenty of things on the wall of fear. Markets like don't have a lot of volume. You know, you're starting to see distribution. You're starting to see other sectors already in a bear market. Yeah, all those were very, very big signs. And then you saw drones and space stocks like rip faces and go crazy and blah, blah, blah. And like, yeah, I mean, not good. Not good. So this is very key, guys. This is very, very key. And this is the temperature down here. This is what first alarmed me back in December 2024 when we crossed above this, right? And if we're looking at the Qs, it would be below it. But remember, this inverse. So up is bad, down is good for the quorum. So when we crossed above this zero line during this period from December 2024 till about June 2025, we were very, well, actually that was May. So yeah, I don't really use the temperature here for like telling me like coast is clear. Like maybe like, we're going down, but I mainly use it like, hey, things are not okay. And as long as it stays above this, or inverse on the Qs, as long as it stays below it, things aren't okay. And the same thing happened right here. October 6, 2025. I sat there on X and I said, I'm pulling out of a lot of my trades. I'm scaling back. I'm going to be more safe, blah, blah, blah. And then we ran up, and then we had that pullback in November, right? We had the pullback in November. Then we collapsed, and then we ran back to all-time highs, but this thing never went back below the zero line, and then it reaccelerated right now to this. And that's why I've been sitting there, and people are like, you're such a bear, blah, blah, blah. Like, whatever, dude. I'm whatever's going to make me lose I don't want to lose a bunch of money and getting blindsided by this. You know how many people got blindsided by this? A lot. People didn't really start getting very, very bearish until like March. We're in March. March just ended. So yeah, I'm about the probabilities. I'm about protecting my gains from April to October, protect my gains, and let me get back whenever things are really good. During this time, I'll trade a little bit. When we're chopping sideways, I'll do some shorts, I'll do some longs. When we start doing this and we're in a clear downtrend up until now, because now we've had a big bounce back, and now we need to understand, right now, I'm not really in any trades. I'm not really in any trades right now. I'm sitting here and I'm waiting. I'm sitting on my hands and I'm waiting, because it's not worth sitting here saying we're for sure bouncing off this and going lower. It's not worth saying we're for sure going to continue to go down and the correction is over. I think you understand. If you're still here in this video, we don't know. There's a lot of probabilities. There's a lot of things that can happen. Trump could say the war is over tonight. That's going to be uber bullish, and then this thing probably does go down and cross. There's a lot of things at hand right now. You can't just sit there and be like, I'm buying puts because, there's good risk to reward being close to that 200-day moving average. But again, like you just got to wait for confirmation. If you're an investor, this doesn't really matter too much. It does. Like if we continue to go down, you don't want to be blowing all your cash. Now, if we confirm that the correction's over, you do want to start pumping that money into the market because we're going on this new bull run, right? If not, then you want to conserve some of that capital and keep it for when we go lower. Last thing on this, from here, 28 October until the bottom on 7 April was about 161 days for 2025 Tariff-geddon. 17 November from this peak until we broke out was February, March. And then if we did the same timeline, 161 days, puts us at the end of April. So meaning if it follows this exactly, right? If we do bounce here, just like we bounced here last year, and we shoot up to, right? We shoot up here, then we would probably bottom around April, May time. Same timeline, same looking, a lot of things, same looking chart, same looking quorum. It's crazy, but it's very, very similar. Same president. Crazy, guys, crazy. In a pride thing, the markets didn't pump because what Trump said. They pumped because of basically what the Iranian ministry said about, something about a ceasefire or want negotiations to, if the negotiations are met, then they'll end the war or something. That's why it pumped. So Trump pumped this market and bottomed it in April during Tariffgeddon. I'm sure he wants to do the same thing. So either tonight he's going to announce the end of the war, which I don't believe is going to happen, or we have another leg up, and then he's going to be the one to come out and be like, end it, send markets, and then we have like a 12% day again, like we did back in April, which was crazy. But I'm not sitting here trying to tell you guys this X, Y, or Z is going to happen. I'm sitting here saying X has this probability, Y has this probability, Z has this probability right now. The higher probability to me right now is still that this correction is not over. Then the second next probability is that this correction is over. And the third probability, which is the least probability, in my opinion, is that this is a bear market. Probabilities, they matter. But what really matters is waiting for confirmation. Don't FOMO. Don't fear uncertainty and doubt, FUD. Don't do any of that stuff. Anyways, real quick, just some really good opportunities, guys. We talked about a lot of them already. Let's see. I mean, Zeta, if we look at the Williams percentage range, every time it's hit here, it's had a big rally. So it could have that. Again, look for IGV since Zeta's in IGV basically, or along those lines in the SAS community. Look for that. I could see, basically it's around the 200-week moving average, around $12 to $15, which is where we are. We could either bounce here, bottom here. Honestly, guys, the monthly chart does not look the greatest. I just got to be honest. It does not look the greatest right now. We printed a bear trigger. We have a red high five trend. We're still at this volume shelf, but man, if this is not over, if this is a bear market or something like that, I hate to say it, but Zeta can go a lot lower. 13, 12, 8 could fill this volume gap. I hate saying that. And yeah, look, when it comes to Zeta, the fundamentals are there. They're getting better. The growth is there. It's getting better. Everything's getting better for the company, but it's coming down because of macro, because of Saskeddon. That happens. That happens. When I bought Tesla back in 2018, 2019, everybody hated the stock. The fundamentals were getting better. Deliveries were getting better. Everything was getting better, but the stock kept coming down until it hit this flip, this inflection point, and then everybody got bullish on Tesla, and then that's how I made over 1,000% on the stock. Okay. I'm not going to be right on every investment. I think I'll be right on Zeta. I think I'll be right on Oscar. I think these are great buying opportunities, but it can go lower. It can go lower. I don't control the stocks. People get on me because I was buying up here and buying down here and buying down here and buying up here. Okay. I just really like the stocks. I think they're undervalued. I'm buying. I'm not telling you what to do. I'm giving you my opinion. I'm telling you why I'm bullish, why I'm buying. But I'm not sitting there saying, you need to buy this stock because of X reason. I'm not doing that. I'll never do that. It's your money, okay? Zeta, Oscar, Mobileye. This thing's just, man, it's wrecked. It's wrecked. But I do still believe Mobileye in 2027 will have a really good year as autonomous vehicles and robotics that they have start coming online and start really crushing it. I could be wrong on this one. If I had to draw it up between Zeta, Oscar, and Mobileye, I would say I wouldn't be surprised if I was wrong on Mobileye. I would be surprised if I was wrong on Oscar or Zeta. Not that I don't have high conviction on Mobileye, I do. It's just like, there's some investments you're like, I have high conviction. I really do believe in the company, but I can see where it could go wrong. With Zeta and Oscar, I can see where it could go wrong, but I just think it's very, very low likelihood. I think Microsoft is severely undervalued, guys, and it's sitting here at a very strong, it's sitting under the 200-week moving average. This is a moat of all moats. It's like a $2.7 trillion market cap now. It was just over $4 trillion. So from 350, I think this stock doubles over the next 5 years. So that's pretty dang good returns. But yeah, I think it's bouncing right at a very strong support area here between 340 and 370. I can't really see it going down that much more, but if the market does want to go lower, like it wants to retest here and reject, then you could see, 340, even 300 possibly. We're just going to have to see. I think Meta's undervalued. It's not as undervalued as the rest. It hasn't had as big of a fall. We talked about Robinhood. I think Robinhood's undervalued and at a very strong area. But guess what? Robinhood could drop down to 40 to its 200-week moving average too. I like SoFi. I think SoFi's undervalued. I think SoFi can drop down to $14.34 because guess what? That's the measured move of this rounded top. I called out this rounded top on X live, and look at that. The measured move is taking the top to the bottom or the bottom to the top, taking that distance and saying, if it went from here to here inside a bull flag, inside a rounded top, inside a double top, inside a double bottom, blah, 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 whatever charting pattern, if it moved this much and it took this much time to move, then a measured move in a measured time frame, it should take this long. It should take the same amount of time or less to move this same amount of ground. Hope that made sense. So from the top to the bottom, from the bottom to the top, you measure that, you paste it on the breakdown, and wherever you get is the measured move. And guess what? It's about to come down to the measured move. And I can blow your mind right here. This was a cup and handle on the monthly time frame. Here's your cup, here's your handle, there's your lip, and literally if you take the bottom to the top of this and paste it right here, where'd you go? You went straight to the measured move here. And then you topped out there, rounded top, now you're coming down. And look at that. You're coming right back down to the cup and handle retest area, which you did not retest. You broke out, now you came back, now you're retesting. So right here is a really good spot. I really like this spot right here to be adding. I like service now. There's another one, like support here, support here. It's getting down here. It's another one that it's in the monthly sweet spot. Just so many stocks that are beaten down, guys. MasterCard looks really good. It's, retesting this area. Of course, it can drop lower. It can drop down here to like 400, 360 to 400 range, of course. But I do like MasterCard. I do like Visa. It's at this support. Next support would be right around 250, 260 range. These are just like all great companies with great moats. UiPath, this one's just, if you believe in UiPath, you can honestly say, I'm going to invest in UiPath here if you wanted to, and you believe in the company. And as long as you don't break below like $9.50, as long as you don't break below $9.50, you could just sit there and say, I'm just going to hold. But if you break below $9.50, then you can exit. And that's it. Because if you break down below this support dating back to 2022, I don't know. The stock might be donezo, unless it's a fake breakdown and then we go up. PGY, Pagayo, another one. You could sit here and say, okay, we're here at literally its lows, the lonely lows. If we break down below, well, actually, it's still got some room. But if we broke down below like $6.30 or whatever, then you could just say, I want to exit. But that would still be like 50% loss. So I don't know. Maybe this one you just wait for a bounce or something. But I do like the company. Who else? I mean, Amazon. Amazon's such a solid stock. It's literally still holding up the trend line here too. Still holding up the trend line. Hasn't broken through it yet. But on the monthly, you have a bear trigger. You have that bearish cross. It hasn't had a bear trigger and a bearish cross, both to combined since the bear market of 2022. So there are just some things that are just like not that great looking. Just not that great looking at all. But who else? Even Nvidia. Nvidia No, it hasn't really moved down yet. I'd like to get NVIDIA down like 140 or something if we can. AMD hasn't really broke down yet. I believe it can get down to like 150. And that'd be a really good area to be adding. Yeah, as you can see, there's so many great stocks. It just comes down to you, your fundamental analysis, and deploying capital the right way. Either DCAing a little bit at a time up until summer and using up that 15 to 30% cash, or buying half when the fundamentals are there, it's undervalued and it's oversold on a weekly or monthly chart. Buy half and then wait for a bull trigger if you follow me, or if you don't follow me, wait for, I don't know, wait to reclaim the moving averages, or however you want to do it, right? Whatever your strategy is. But that's a beast of a video, guys. I hope you enjoyed it. I hope you enjoyed all this technical analysis. Hope you got value out of it. Hope you got value out of and, got some stocks to look at that are undervalued going forward. And again, I hope you have a great Easter weekend. Enjoy time with your family. He is risen. Praise Jesus Christ, our Lord and Savior. Love you all. Like and subscribe and follow and do all that good jazz. And comment below what you learned from this video or what you want to see in the next video. Much love, guys. Have a great day.